Hello and welcome to Lipper's Fund Flows Insight Report. I'm Jeff Tjornehoj. For the week ended February 20th, 2013, long-term mutual fund owners added about $4 billion to their accounts. And this week we had some sour information on our economy, with initial jobless claims pegging higher and housing starts going lower. So it wasn't a surprise to see that total flows were just a little bit softer this week. Let's take a look at our macro groups and see where the activity was. Starting off at the top, equity funds had about $2.6 billion in net sales this week. They were followed by taxable bond funds, about $1.2 billion, municipal debt funds, just over $200 million, call about $230 million, and money market funds saw about $19 billion in net redemptions. So this week, as I mentioned, was a rather mixed one for economic news, with both indicators I spoke about pointing lower, maybe slightly softer economic activity, which is to be taken with a grain of salt. After all, we're talking about January data, and January is typically not a great month for either of those statistics. So when we look at the equity markets, we did notice something interesting. For performance this week, we saw about 71 basis point decline in equity fund performance. This is our first drop in performance this year. Recall that our flows data works on a Wednesday to Wednesday cycle, not on a Monday through Friday as the news cycle does. So to our data eyes, this looks like a very new trend. This is the first week that they've been down. Overall, the theme to take away from this is that investors were net redeemers of large cap funds. They also didn't care for their index funds so much. They sold off those. They did prefer a little more volatility and looked outside the U.S. So, for example, emerging market funds took in about $900 million this week. That's a pretty good week for them. The other themes to take away from is relatively lower expectations moving forward. We saw that domestic equity funds took in about $925 million and non-domestic took in about $1.7 billion. That sounds like great figures. However, for domestic equity, the 2-week number now is about $300 million total. They had outflows last week, about $600 million. So we've gone from having, say, $3 billion over a 2-week period going into domestic equity funds. Now we're down to $300 million, a 90% drop over a short cycle. So it looks like there's some fatigue by equity investors, not convinced that the U.S. is really going to be the place to invest this year. We did see some good news for particular funds, though. Funds from Oakmark and Harbor, both of the firm's international products, were both good inflow numbers this week. The next one to take a look at is equity ETFs. Here, an interesting contrast, about $237 million in net inflows. The big news, of course, this week was GLD, the Spider Gold Fund, with about $1.4 billion in outflows, its largest outflow. We also saw that Spider SPY was kind of a modest outflow number this week. So overall, equity ETF investors were really only concerned about gold. They're taking money off the table there. We also saw another week with more interest in Japan. 2 of the top inflow gainers this week, both focused on Japan. The MSCI Japan performance was up about 1.7 for the week. So it's kind of an interesting story there that the performance doesn't seem to indicate that investors are tripping over themselves. However, the flows numbers indicate some nascent interest in anything Japanese. We'll take a look at taxable bond funds next. Again, they had about $1.2 billion in inflows for the week. This is their lightest week of inflows for the year. Loan funds took in about $860 million for the week's top win. This number is about 30% lower than what they accumulated last week. So maybe investor interest is also waning in the loans area. They continued to outdraw high yield funds, which had about $70 million in outflow this week, which was pretty flat considering how large this group is. So overall, we saw some interest in just the loan side. Everywhere else, whether that's high yield or the government treasury mortgage group, which had about $285 million in outflows, numbers were relatively light for taxable bond funds. Let's turn our attention now to taxable ETF bond funds. Here we saw $239 million in outflows, so just about canceling out the inflows on the equity ETF side. About half the weeks this year have been outflows for taxable ETFs. They're slightly positive year to date on total flows. They had about $41 billion in inflows last year. They have about $700 million year to date in inflows, so very different view of the markets there. The PowerShares bank loan was the week's top gainer. They took in about $133 million. So beyond that, relatively light flows and tending towards outflows overall. Next, let's take a look at municipal debt funds. They had, again, about $230 million in net new money this week. This looks like a light week for flows, certainly. It appears from a performance side, a rather rudderless market. We've seen treasuries decline in price as yields have gone up so far this year, and municipal debt funds have a hard time decoupling from treasury performance sometimes, even though they confer some tax advantages over them. So for the most part, we're seeing a back and forth, a tug of war in the municipal debt market. We saw intermediate muni debt funds with the week's best flows numbers, about $64 million in inflows. After that, we saw short municipal debt funds with about $46 million in inflows. Everything after that tended to be in the single-digit millions in either direction. So beyond those two categories, really not a whole lot of municipal activity at all by retail investors. Finally, the last group we'll take a look at is money market funds. Flows this week of minus $19 billion were dominated by activities by institutional investors. They withdrew about $20.2 billion this week, while on the other hand, retail investors allocated about $1.2 billion. So something going on in the coffers of institutional investments, corporate treasurers, for example, leading them to take some cash off the table. So for the most part, it was a fairly innocuous week of flows overall, with most of the long-term funds groups, in fact all of our long-term fund groups, taking in money, short-term money market outflows. Probably a theme we'll see many times this year. If you're interested in seeing data on a more up-to-date basis, please join us online at lipperusfundflows.com. And if you'd like to get some analysis straight from the horse's mouth, please join us here next week where we'll take another look. Thank you.